I think a mistake and something that companies can turn a negative into a positive is a very simple mantra, and that is internal communication before external dissemination. Many times IR, investor relations, or public relations, PR mistakes are made because for whatever reason a company discloses something or fails to disclose something, and then when it does disclose, later it turns out the company hadn't discussed the issues very well internally. Internally, among IR and management, possibly the board, among IR and PR management and the board, and so on. So I think a real good mantra is internal communication before external dissemination. If you look at some key cases in IR, such as the stakeholder concern about labor issues way back when at Nike and also more recently at Apple, you'll see that the companies didn't really have a good response, maybe because they were still developing it. Each of those companies has turned that around and turned from a negative to a positive, but it's really important that IR knows the company well, knows the message, even in a crisis situation, that they're able to formulate the message, discuss it internally before disclosing it externally. So that's number one. Number two, many companies see disclosure as a compliance issue. They're required to disclose, whether it's ad hoc disclosures or whether it's ongoing disclosures, quarterly reports, annual reports, and so on. But I think an innovative company looks at disclosure and investor relations as a tool, and it's a tool to inform, it's a tool to engage, and it's a tool to build and maintain relationships with investors, but also more broadly with stakeholders. Know who your stakeholders are, know the media, know local NGOs, know government bodies, know the stock exchange, know the financial markets, and use IR as a tool to engage with them. And finally, another short mantra: yesterday, today, and tomorrow. IR is about all three, and IR officers need to know about financials from the past, they need to know about today's situation, current events, and they also need to be able to address questions about future strategies, future plans, bearing in mind some regulatory constraints, but still they need to address all three aspects, which by the way are important aspects in corporate governance and in business management anyway.